The private purpose fund, this is abandoned property, keyword here. Funds held in a qualifying trust, so it's the same definition as investment trust funds, that are not required to be reported in pension or investment trust funds. So these funds are used for specific purposes, such as endowments or scholarship funds that were originally defined by the person or organization that gave the funds to the government. So as cheat, property funds, retainage, there's just a lot of more obscure and things you probably wouldn't encounter here. Best example they give you in the actual questions is going to be, okay, you move into a new town. Well, when you move into that new town, you got to give a $100 deposit to use the electric and the power and the water utilities and gas. And that is given to the utility company. And then when you move away, you get that money back. But let's say you lived there for 20 years and you totally forgot that you gave that $100 deposit. So when you move away, you forget that $100. That $100 now goes to the private purpose trust fund as abandoned property. Fiduciary revenues for the private purpose trust fund. Well, here the principal in a private purpose trust fund is invested and the income earned is transferred to an individual separate from the government. So what do we do to record the obligation to a private individual? Here's a journal entry, and when we record the payment, not too important here, just taking a look at it, right? Just getting a little familiarity, but really nothing you're gonna have to do. I would bet heavily this is not something you'll have to do. Fiduciary expenses in the private purpose trust fund, again, really just any deductions from what you've got, right? In that private purpose trust fund, any deductions from the main goal it has.